Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we make investing simple. Got a great show on deck, particularly with the movement of precious metals in the market. Boy, you got silver popping, you got gold popping, new highs recently. We're going to talk about, boy, is it the top? Is it time to sell the gold, or is it time to say, hey, we're just getting started? There's always a discussion related to monetary policy and inflation when we talk about gold. So we're going to give a gold update. And we've got an amazing guest on deck. Before we bring him on, just a reminder, go to yourinvestingclass.com for investing goodies, investing education, always free. Go to yourinvestingclass.com and we'll take great care of you there. Now, Brien Lundin has been a publisher of one of the oldest, if not the oldest, precious metal newsletters. He also promotes the conference. It's coming up. We're going to give you a website on it. It's going to be neworleansconference.com/cashflow. So they'll know where you came from. It's going to be great. So Brien, first of all, welcome to the program. Thank you for spending some time to educate us today.
Very happy and excited to be with you today, Andy. Really looking forward to this.
This is going to be great. I hope I don't wear out my listeners' ears. We're going to talk a little bit about your background. I'll talk a little bit about mine with gold and silver. So my grandfather, it was really interesting. My father, when he married my mom, bought some of my grandfather's property. So I grew up living next door to my grandfather. And of course, that's just was an amazing treat. And he had a very unique job. He immigrated from Germany when he was 6 years old. His father died, so he was self-educated and helped raise his siblings. He was the oldest, and he had what I would say kind of I wouldn't call it a ramshackle smelter, but he did what's called electro smelting, and I think he might have invented that concept where people wanted to know, they wanted an assay, basically, how much precious metal is in this ore. And so people would bring samples of ore to him, and he would take 2 carbon electrodes. He had a huge generator. I mean, just it'd shake the ground when he get the thing going. A big Caterpillar engine on it. And he would put these electrodes down in, mix the stuff in, and it's mad science. It's a fire and smoke and brimstone. And no wonder I'm so goofy. OSHA would have shut him down guaranteed immediately, dumping stuff on the ground and, the old days. And it was like a volcano, man. It would bubble up, and he would melt that stuff down. He'd pour it down into a mold, and the precious metal would sink to the bottom, and he would redo it and concentrate, keep track of how much ore. And I just remember as a young kid, you take that hammer, and that slag would, it would cool, and you take that thing, smack it, and there'd just be little beautiful line of silver right at the bottom. Or he would use a ceramic. He'd smash that, and there'd be a little tiny button of gold, and he would add those together in his own collection. And golly, he had a button of gold about that big. He'd show it to me and nobody else. We were special. So I held gold in my hands as a young man. He would, for being from Germany, the Weimar Republic was something that was a big deal to him. And so he had experienced, these wheelbarrows of cash being worthless and the German mark crashing. And I mean, I was exposed to this, this is 1972. I'm 4 years old, and just incredible. So I've always been a bit of a gold bug that way. So that's a little, that doesn't make me a good investor in it.
Yeah, but that's the key is one of the things I try to do a lot is to explain to people who are new to the sector what gold is, its role as money, and how it really is and should be the center of the financial universe, and everything else, the value of everything else, should relate to this one standard. And some people, like your grandfather, and likely you, because of him, understand that on a visceral level.
Very good word.
It's hard to explain, but you just know that this is money, and this is economic freedom and protection from something, and it's insurance against something that we know is going to happen, that the purchasing power of the dominant currency is going depreciate, and it's going to go away. It's going to lose value over time. Something is going to happen, and gold protects against that.
Tell us a little bit, Brien, about your background. We're going to talk about, you're the publisher and editor of the Gold Newsletter, which we'll recommend people check out. Tell us a little bit about your background. I mean, you and I had a chance to chat before the show, and you've been around the block for a while.
I've been around the block, and as I'm reminded every morning when I look in the mirror, it's been a long, hard trail, Andy. A guy named Jim Blanchard was really a remarkable, charismatic figure in kind of the hard money universe. He was an arch libertarian and gold bug through the 60s and early 70s. When Nixon severed the last remaining tie between the dollar and gold, meaning that other countries could not send their dollars back to U.S. Treasury and get our gold in return, when he stopped that on August 15th of 1971, Jim heard Nixon's announcement and knew that this was going to usher in a period of unrestrained spending and rapid depreciation in the purchasing power of the dollar. So he lobbied, and he started Gold Newsletter, which I still publish, as a way to advocate and lobby for the return of the right of gold ownership to American citizens. A lot of people don't realize it, but we were prohibited from owning gold. I mean, it was up there with heroin and plutonium as things you aren't allowed to for your own good. At the time,
for the greater good. For the greater good.
So just accept it and move on. So that was the obviously ridiculous, and Jim knew that people needed to be able to own gold to protect themselves from this inflationary wave. And so he was successful, did a lot of crazy things to bring light to the subject, and was successful by 1974, the end of 1974, and then decided to have an investment conference to teach people how to invest in gold. That became the New Orleans Investment Conference. The first event was in 1974 and featured just a parade of luminaries and giants of history like Margaret Thatcher, Ayn Rand, Milton Friedman, Alan Greenspan, F.A. Hayek, on and on, a long list of really brilliant speakers that we still bring today. Today's most important and insightful speakers, we still bring that conference today. So he started that in 1974. I came along in 1985 as a junior copywriter for Jim, became fast friends with him, and ended up running his conference and newsletter business for him by 1990. And he passed away in 1999, and I bought the majority interest that I didn't own already from the estate, and have been running it since the early 2000s and owning it. So that, in a nutshell, is my long history with the gold and conference industry and the hard money, the sound money movement, as it were.
Well, let's begin with some things that I feel we likely agree on. There's 3 reports that people might consider downloading. The first one comes from the Congressional Budget Office and talks about the fiscal path we're on. Second one comes from the Government Accountability Office. That comes from the Comptroller General of the United States. It talks about if you take the budget report from the GAO, it talks about the fiscal path we're on. And then you have the Secretary of the Treasury that puts out a report, and it talks about the fiscal path we're on. And in all 3 of those reports, there's a common word or common theme that's been around for a long time, and that word's unsustainable. That it is not just the money that has been borrowed, 30+ trillion. It is the money that has been promised in terms of income security. And I would just say that whenever the government labels something, you can almost rest assured it will do the opposite of whatever that label is. I mean, the Affordable Care Act isn't affordable. Social Security is not secure.
Inflation reduction.
Income, I mean, you could just go down the line, right? And so there is some unsustainability to this. I don't know when we have I don't know when the big everything bubble pops. I don't have a crystal ball on that, but we do know that, if the Federal Reserve had their way, you'd still lose 2% of your cash every year if they had their way.
Yeah.
And then we're losing it at a much greater rate than that. We had this transitory inflation that was supposed to just be kind of part of COVID, and we didn't have shipping lines open, and so we could, prices getting higher, we couldn't get goods and services. It brought a scarcity of goods, but once COVID relaxed, the scarcity won't, they'll be available again. Globalization will resume, and we get back to decent prices. Didn't happen. Now we have sticky inflation. In my opinion, the Fed's in a mess. In one hand, they are trying to control this animal of inflation. On the other hand, I'm seeing the labor market. That's where I've had my eyes, the labor market, because once you raise these rates in the the Volcker years were impressive, but this is even faster, not quite as high, but faster than Volcker.
Yeah.
So just your thoughts on general monetary policy, where the Fed stands right now, because I think if people can understand that, then they can kind of appreciate where a precious metal might fit in what they're trying to do. So your thoughts on the Fed, inflation, printing money, etc.
Yeah, so get ready to interrupt me when you can, because I can go on for the next hour or two with that kind of
We've got plenty of hard drive space, so
you just
rock
gave
and
me free
roll.
rein, Andy. So watch out. Yeah, you mentioned those government reports, and they talk about us as unsustainable. And Fed Chair Jerome Powell uses that term as well, but then says now is not the time to address it, and it's never the time. But let me tell you, if you read the government reports, the GAO reports on the trajectory of the federal debt and everything else, I mean, it will make you walk out to the ledge. It is so depressing. But I'm here to tell you that those reports are sunshine, rainbows, and puppies compared to what the true story is. It's much, much worse. The trajectory of the debt is much worse than the CBO projections. It's proven to be all over and over again. Typically the debt has been doubling for every 8 years or 2 presidential terms since the 2000s, and it is really out of control. I've heard people for decades on our stage and other stages, and really smart people talk about the debt bomb blowing up, and it never did. Now I look at it, and the numbers are just absolutely inescapable. The interest rate, the interest expense in the federal debt has soared to over $1 trillion a year. We're paying more on interest than we are on any other single budget item. Welfare, that's national defense, everything except Social Security, which is its own little set aside. So the federal debt is out of control. Corporate debt is out of control. And all of this is the result of over 4 decades of not easy money policy, but ever easier monetary policy. One of the charts that I show in my presentations that I think says everything in one chart is the Fed funds rate since 1980, when Volcker just started lowering it from those peaks that he had brought it to kill off inflation. And you see that over that 4 decades plus, every time there was a recession or any kind of a hiccup in the economy, the Fed would have to lower rates, and then after that recession would go away, it would try to raise rates again to normalize it, but it was never able to get it past the previous midpoint of the range before it was forced to lower it again. So I put little red lines under each bottom of the rate cutting cycle, and you can see that over those 4 decades, it's a steady stair step downward to 0, which of course we reached in 2008. Over that period, the markets became addicted to that ever easier money policy, and the expectations came that interest rates were always going to get lower. The Fed was always going to come to the rescue. So you get past that crisis and you just go right back in, you blow up another bubble because the Fed was going to come back in. 2008, interest rates were no longer enough to satisfy the markets and the economy, so they came up with quantitative easing,
Yeah.
TARP, a lot of other rescue efforts, et cetera, a lot of fiscal response. Then came, of course, COVID. And in COVID, everything that they did over 4 to 5 years after the great financial crisis of 2008, with COVID, they did it in 4 to 5 days, literally. Jammed
Yeah.
things right back to zero, doubled the Fed balance sheet, came up with not helicopter money, but direct injection of
Yeah.
liquidity into bank accounts, into the veins, and monetary adrenaline injected into the veins of the economy. It was really just dramatically so much more than they did before. The next crisis, they're going to blow your socks off with whatever they come up with, because they're going to have to do much more than what they did before, because the addict has developed a tolerance for the drug, and it's going to take that much more to get the same effect. So the end result is you have that steady series of ever easier money, ever lower interest rates, and that encourages ever greater debt. And over that period, the other line that I put in that chart is the federal debt, which just rises tremendously. Now,
Yeah.
the problem with that is you can never have normalized interest rates again, because now the debt is so large that even normal interest rates create a huge debt service payment that's unsustainable. So that's where we are right now.
I think it's also important in the subprime meltdown in '08. There were, if you look at a timeline of the Federal Reserve balance sheet pre 2008, it's certainly there's just an absolute delineation, because they granted themselves powers that they did not have before. The idea that they would now pay
Extra
interest on deposits and so forth. And the idea with with Bernanke, was that, we would unwind this, we'd normalize it. It just kept doubling. It's probably around, 700-800 million '08, doubled it just that quick with Bernanke. But now, I mean, the Federal Reserve balance sheet, multi trillions, it's backed off a hair off at the top of, I think, 9. But it's a fascinating chart to see. And if people would look at that timeline and look at the expansion of the balance sheet of the Federal Reserve, even if they're not a student of monetary policy, you can look at that and just say, look, things are different now than they were before. And I don't think it's just the money that we've borrowed, the 30 trillion, is the money we've promised. Because when you make promises, those are liabilities as well. And the promises we've made in terms of income stability of pensions, medical dependency, healthcare, Social Security, you line all those up, you got a gross domestic product north of 20 trillion, but you've got promises north of 200 trillion. And those will just get bigger as inflation ensues. So, I guess with that foundation, it behooves people to talk, first of all, defense wins championships. And for me, you said earlier at the top of the program, you talked about protection and insurance. And to me, that's my mindset when I purchase at least physical gold. And so obviously I own physical gold. My mindset's probably different than most on this, so I'm going to get your take. Tell me where I'm wrong on this. But to me, it's a tremendous likelihood that will be fruitful insurance in the case of a massive devaluation of the dollar. If the dollar were to be devalued in a hyperinflation type of environment, your gold is historically, if you look at the tragedies of things like Zimbabwe and even Venezuela and Argentina and some of the South American countries, gold seems to be where a lot of people run to. So comments on gold as a protector and the idea of insurance.
Yeah, I tell people, especially people who are new to the sector, that there are two reasons to buy gold. One is insurance, and one is as an investment. And you always need that insurance. If you relate it to your home insurance, you don't really expect that your house is going to catch on fire or get hit by a tornado, but you're insuring against that possibility. With gold, you're insuring against an inevitability, and it's not
Well
necessarily
said.
just about hyperinflation or anything else. It doesn't have to be anything on the extreme. Do you feel confident that in 3 to 5 years, the dollar is going to buy significantly less than it is today? And I think everyone would say yes. Even at 2%, it would, but at current levels, it definitely will be worth a lot less in 3 to 5 years. Gold protects against that. It doesn't track inflation tick for tick, but it over time, over the broad sweep of time, it protects value, and it's only done it for 4 or 5 thousand years, so you can pretty confidently project that it will continue to do so. And you made a comment earlier, Andy, that I think was very important. You said you don't know whether the blow up of this system is directly ahead or not. I totally agree with you. I don't think anybody knows if it's the next crisis or the one after that or the one after that. Which one or at which point does the currency lose all of its credibility in the public mind? I mean, they start to realize that these crises are coming at regular intervals and the money gets a lot cheaper with each one. At which point does the currency lose credibility? I don't know what that exact process is. I don't think anybody is smart enough to know, but I think we can be confident that you're going to want to own gold and silver going into the days ahead, because may not be at the end of the process, but we're in the end game right now. We're at the point where you can never have interest rates sustained over the rate of inflation, or the whole house of cards collapses because of the debt service costs. So we will have negative real rates going forward as long as we're under this monetary regime.
It's interesting. You look at the resistance. If you're a technical analyst, in the Bernanke years, people bought a lot of gold, particularly silver too. Silver just went through the roof.
Yeah.
And gold, let's just put gold ceiling around 2000 and it hits up against that. It's a new high. The old floor was 1,000. So you basically had a doubling from the old floor to the new ceiling in a macro, in a long-term chart. The feeling I have, now that it's blown through 2000, often the old resistance becomes the new support. I think 2000 is now the you're not going to see gold under 2000 again. That's my opinion. I could be wrong. I'm really good at being wrong. So when I say
Yeah.
stuff,
Takes
but
practice.
as a technical analyst, that's kind of that's the textbook idea that the old ceiling becomes new floor. But it's different this time. The idea of it hitting 2000, the Bernanke years, was really a speculative idea that, we're going to do this QE, we're going to lower interest rates. I mean, obviously, this is the demise of the dollar, and people bought the hell out of gold and silver, and up it goes. Didn't happen, didn't sustain, dropped back down for, till now. This is 15 years or whatever it is. And the feeling of it going up this time, though, is a result of real inflation to me. I mean, now person goes to a grocery store, you can't get out of a grocery store for under $100 for buying just a couple of meals. So
Yeah.
it is a very much more of a real thing. And we won't get into the wonkiness of, why I believe that is. I think I think the Fed has not kicked the can down the road. I think a better metaphor imagery would be rolling a snowball up a hill. It gets bigger and it's higher. Pick your
Just
metaphor
come
that
back
none of
on
them are
them at some
perfect.
point.
Yeah, none of them are perfect. So I'm going to say now I'm a gold bug. I don't know if I'm a student of monetary policy, but I try to keep abreast of it. Let's talk a little bit about gold as in we talked about gold as insurance. Now, this is where I'm probably different than many of the people you talk to or the contributors to your newsletter. When I buy insurance on my home, I say goodbye to that money. It's a cost. When I buy insurance on a car, I say goodbye to that money. I don't expect ever to get a windfall from it, because if I do, that means hell broke loose.
Yep.
If I make a claim on any of my insurance policies at all, something in my life was bad. So what's weird is I would prefer to have that expense in my life to sleep at night, but never have to make the claim. So if you see me selling my gold. Uh, Andy is, that's not, it wasn't a good day, right?
Right.
Whatever's happening was not good news. If I'm having to sell my gold for what I really need in my life, well, I don't need gold. I need food, clothing, shelter, and medicine. That's what I need. I need
Yeah.
commodities that are consumable. And certainly, gold and particularly silver can be used they have the industrial
Right.
uses. So I say goodbye to that. As an investment, I struggle more with gold. I really do. What's better, a golden goose or a golden egg? I mean, if you had your choice to pick, would you pick a golden egg or a golden goose that lays the golden eggs?
Well, I think everybody, and this is what I tell people who are new to the sector. Again, I said the first thing you do is get physical metals, get your insurance in place, because that's something that's going to happen and you need to protect yourself against.
I
And
agree.
it's not a possibility. And the other key aspect of that kind of insurance is, unlike home insurance, car insurance, you only have to pay the premium once for gold
Yes,
insurance.
and you get to pass it off to your kids, hopefully.
Yeah, and it stays and
Hopefully.
you can, it is for your it protects your wealth for you and your kids and your offspring, et cetera, and your family. The other thing is, though, if you look at the history of gold versus the dollar, basically the gold price, you see that for a lot of times in history, gold just trades sideways because nobody's really worried about the dollar. But then when people really get worried, then gold
Pops.
makes up for a long time and pops and probably overshoots equilibrium. When you're approaching a period like that, when you see that the macroeconomic picture has gotten to such an extreme that you're very confident that gold's going to start making up lost time and go through one of those big surges, then you can look at gold as an investment. And there are ways to do that where you can either do it with greater liquidity and or leverage, as opposed to just holding physical bullion. So we have a free report on our
Interesting.
sites that goes into all the ways you can do this. But you can invest in ETFs, paper representations of gold, not for insurance, because if you don't hold it, you don't own it. You don't own it. You can't rely on the paper representations for that insurance. But still, for liquidity, you can invest in things like the Sprott Physical Metals Trust for gold and silver, even platinum, palladium, and uranium. Uh, and you can hold as paper representations, and you can trade those if you like. As the metals prices go through those swings, you can also leverage them through gold mining stocks, which is a whole nother area. If you This is one of the areas that we focus on in Gold Newsletter, talk about junior mining stocks that offer a lot of potential, but it is not for widows and orphans. It is a risky area, and you don't want to go into that area without doing your research. The advantage is it's an inefficient market, so if you do your research, you can outperform. If you're not interested in doing that kind of time and effort and money to learn about the sector, then you can invest in the indices like GDX and GDXJ and the like that cover gold and silver miners. And those tend to outperform the metal. In a typical gold bull market, those indices should outperform gold itself by 2 to 4 times over time. And that's another way to do it. And of course, there's features and options, but that's another very risky area that you really have to educate yourself on.
Well, I have to say I'm taken back a little bit because very rarely, in fact, this might be a first for me. Generally, gold guys are, you mentioned the visceral connection to the metal,
Yeah.
and when I used to do a lot of public speaking, it was really fun. I took a bit of a risk. I would take a 10-ounce bar, but I would take a one
Yeah.
ounce round, and I'd take a Zimbabwe $100 trillion bill, and I'd
Yeah.
take a 1 ounce of gold, and I'd pass it around the room. Throughout my hour speech, you could get through a lot of the people. And I'd say,
Yeah.
I'm going to trust everyone I get this gold back, but hold them in your hands at the same time. Hold the paper in the one hand, the Zimbabwe $100 trillion bill, and people the number of people who have actually held a physical ounce, there's just not very many people who have actually held it in their hand, and
Yeah.
it plops in your hand, and people start to rock it to
Solid.
sleep
Yeah.
automatically because they're just taken back by the sheer mass of the density of the metal. So I'm really actually kind of surprised and impressed, because usually if someone's going to talk about gold, they're like, look, you got to hold it in your hand, and it's sacrilege to talk about an index or an ETF.
Yeah.
So that's interesting stuff. But if you have time, I'd like to delve into each of those things you talked about.
Yeah. Yeah.
And I'd like you to, pull out your shotgun and poke some holes in some of the things I do, and tell me whether I'm up in
Yeah.
the night or whether you'd agree with them. I think that in this day and age, people get divided and they get all visceral about it, but all uptight, and there's a lot of balkanization going on. But if I don't talk to people who disagree with me, I can't get smarter.
Right.
Let's do this though. First, let's do a little plug for the Gold Newsletter. How do people get that? If I want to subscribe to that, how do I go about that?
Goldnewsletter.com. Very, very simple. You can go to that site, and we actually have a free report called The Investor's Guide to Gold and Silver that is not one of these throwaway, 5-page reports promoting what we do. It is an extensive 40-page report that covers every aspect of investing in precious metals, physical, mining stocks, mutual funds, futures and options, and the like. And it's all there. And I tell you what are the best newsletters to subscribe to, some of my friendly competitors in the industry, what are the best conferences to go to. And it really
Very
is
cool.
a guide. So that's all free, and urge your listeners to do that. And that's at goldnewsletter.com.
Goes to goldnewsletter.com, and also New Orleans conference coming up we got plenty of time to get your flight and get ready for this. It's in November, 2024. So we'll talk about that. Let's take just a real short commercial break. And when we come back, we're going to dig deeper more. Now we kind of had a big picture conversation of debt and insurance and the Fed. Let's come back, get a little granular after this break. We'll be right back.
To be here at this live event just brings it all together, and I've just gained so much more confidence just being here. Love the guys, love the program. Best education, not just in stocks, just financial education, hands down. The most phenomenal team of teachers. They are genuine, humble, and full of integrity. They're real, and they absolutely make you feel like that they care. They're going to be there every step of the way, and they're just amazing. That's been my experience with them.
We're back, and I'm just thrilled to be speaking with Brien Lundin. Amazing stuff so far, and you've surprised me, because generally when I talk to people like me who are gold bugs, I'm a little bit of an outlier, because if you start to talk about ETFs and think that, if you can't hold it in your hand, it's worthless paper, and the irony of that, the people that bash the GLD, they really liked money pre-1971, which is a piece of paper that's backed by the metal.
Right. Yeah. Right.
Right.
Yeah.
And so, I was on this cruise ship once. I was on an investing conference once in this cruise ship. All hundreds of people. We get on this cruise ship, and Schiff is there, and all the gold guys are there. And
sounds like some of my cruise ship conferences. You sure you want to work with that audience?
Yeah, it's great guys that run. It's the real estate guys, Bob, Robert Helms and Russell Gray.
Oh, yeah,
great guys. Those guys.
I probably was on a ship with you a couple of times.
They're just great guys. I usually play basketball with my son, so I haven't gone to go. They got the Peppers with guys that gone for 20 years.
Yeah.
Anyway, I'm there with Anthem Blanchard, and he's a gold guy, great guy, friend of mine, and we're sitting at the table, and he's pitching his gold. Come buy my gold, and I says, hey, if I buy your gold, how much should I buy? He goes, buy as much as you can. I go, well, I don't want to keep that in my house. That's a lot of gold to keep in my house. He goes, I'll put it in my vault for you. I go, well, how do I know it's mine? He goes, I give you, a receipt. I go, what do you print that on?
Right. Yeah.
And he's like, crap, I've been had. And everything's paper. Adidas paper, stocks are paper. Yeah. So I'll tell you, my physical gold, I've kind of kissed that money goodbye. I will probably not see it in my lifetime. unless we have a tragedy. It's an insurance policy. If you ask me my preference for the metal, it'd be for my children to inherit that metal. That would be the ideal. But I have to be ready for the fire, because I thought your word choice was excellent, inevitability. But I also like the goose that laid the golden egg. And so, for example, I didn't buy more gold recently because I think I have a lot. I got a lot of precious metal. It doesn't cash flow. It doesn't give me, income. It's not a goose that lays golden eggs. So I've had mining stocks for years. I bought a whole bunch more of that on February 17th of this year. Very rarely do I get lucky and get a bottom like
Oh, that
this.
was
A
perfect. Yeah.
total luck. I mean, it was way lucky. But on February 17th, I bought a bunch of Newmont mining. And
Yeah.
I think it was probably around 34 or something. Now it's in the 40s. That's a nice capital gain. But what's more important is this: I'm not a buyer of gold, I'm a producer of it. And by owning those shares, I now own a share of every single freaking ounce of gold that will ever be pulled out of that mine forever. And I own real estate now because we own the mines, or at least have mineral rights to these mines. And as gold goes up, it's a lot like oil. You have lifting costs that remain fairly stable, a little inflation there. But as the price of gold of what I'm selling goes up, now I have my pile of gold for insurance of my own, but now I'm selling it. And if you want to get rich in the world, learn how to sell stuff. I sell books, and I'll tell you, I've made more money from the books I've sold than I've ever made from the money money for books I bought. I make more money from the gasoline I sell through owning ExxonMobil than I ever get through buying it. And if you learn to be a net producer in your life, what's wrong with the gold play of having Rio Tinto, having Barrick, which isn't as good as Newmont, and getting dividends? And on top of that, you mentioned options. I can sell, I can go to the GLD and I can sell puts outside of a standard deviation every month, which I do. You sell them and sell them and sell them and sell them and sell them. That way, if gold has a nice drop, I own the gold, sell it, and convert it to physical. That way I'm getting paid every month on the chance I might buy gold cheap. I'm collecting that cash, collecting that cash, collecting that cash. And then when it drops and I have the ETF put to me, I liquidate that PTF, I buy the physical, and it covers all the gold dealer spreads and then some, because I've been collecting premiums on every month that it hasn't. Anything wrong with owning a mining stock like Rio Tinto? And they do a lot of steel, but they do their share of copper. Anything wrong with Newmont Mining and Barrick Gold of being an owner of a mine? That's a goose that lays a golden egg. And anything wrong with selling options for cash flow as I play the gold game? Anything wrong with that?
Nothing wrong with that. But it gets back to what we were talking about, the difference between insurance and investing. And so even and you're coming up with some brilliant strategies to make money in the sector, even when you don't have a rising price,
Bingo.
rapidly rising price. So there are a lot of ways to skin the cat, and we cover that in that report. First off, insurance. Make sure you have that fiscal that is insuring your wealth, and it really depends on your personal level of comfort on what that is. But studies show 5–10% of your wealth or investable wealth, that amount of gold would offer the premium risk adjusted return. Some people have a lot more. But when you get into the investing angle part of it, there are a lot of ways to do that. And that, again, is trying to get leverage on what you perceive to be a catch-up period in gold. And you had mentioned that the last bottom for gold was about $1,000. I marked it at $1,040 in 2016. And if you look at the history, we're in uncharted territory right now, record highs for gold almost every day. So where are we going? If you look at the history of gold as an investment, as an investable asset, it only goes back to 1974 in the US. So you look at that period, you had two bull runs in the 70s One, the gold price went up 6 times. In the other one, the gold price went up 7 or 8 times. Then in the 2000s, it went up about 8 times. So if you look at the bottoms and you figure that this next gold bull market is going to do similarly, somewhere between 6 and 8 times the bottom. Well, the bottom this time was around $1,000. So at the end of this cycle, however long it lasts, 3 years, 6 years, 10 years, whatever, the gold price should be 6 to 8 times that $1,000 bottom. And that's where we're going to be heading. So then you go into how to invest. You mentioned, people bashing GLD. Well, I'll bash GLD and I'll bash the silver ETF SLV because yeah, you look at the prospectus and there's a lot of wiggle room in there, and you look at the custodian of those funds, and it's JP Morgan, whose metals trading desk was called a criminal operation by the Justice Department. So I advised the Sprott Fiscal Bullion Trust because Eric Sprott, who started that, is absolutely a fanatical silver and gold bug. He buys the metal and doesn't think about loaning against it, doesn't think about using fractional reserves or anything like that. It's antithetical to him. It's heresy. So he has a Fiscal Gold Bullion Trust, symbol PHYS, and he has a Fiscal Silver Trust, PSLV. And I recommend those. And they're supposedly, because they're trusts, there's some tax advantages, but everybody has to their own personal tax advisor for that. But
I'll tell people why. I'll tell people why they need to subscribe to Gold Newsletter, and I'll tell people why the New Orleans Conference. Go to neworleansconference.com/cashflow. I'll tell you why a person gets newsletters and goes to events like this. I'm a stock guy in that I'm not a stock guy. I have real estate, I have gold, I have business. I just like the cash flow. But I'll tell you why I think the precious metals arena is part of what you study as an investor every month and why you keep abreast in it. If you ask me where Apple's going to go tomorrow, my answer is I have no idea. And if you ask me where Apple stock's going to go in 2 weeks, I say I have no idea. And if you ask me where it's going to be in 10 years, I say I have no idea. I think it'd be up because of inflation, but I don't know. I just don't have a crystal ball in that stuff. But I'll tell you what, if you ask me where I think the dollar will be in 20 years, I know exactly where it's going to be. It's going to be lower. So the problem with investing, one of them is you're always trying to predict the future. So you're caught in this paradox of constantly trying to do something that can't be done, with one exception. I literally bet the dollars in my wallet that they're going to lose value. And I think that if you can understand that there is something that I do believe is inevitable, and then the Fed's lost control of it, but even if they had control of it, they're still targeting a 2% reduction. That's their goal. So if a person wants to bring the lighting of that to their investing efforts, subscribe to Gold Newsletter and learn about gold. You can't learn about gold without learning more about monetary policy. I guarantee that's an education people will get as they learn about gold. And come to this conference where you'll hear some of the best minds on this, and you'll walk away with a tremendous education from some of the best in the world. You were telling me some of the people you've had in the past, who you're having in the future. I think it's amazing. I'd like your thought on this as well, and shoot holes in this. I think there's only one instrument that far and away is better than gold in an inflationary environment. I think there's something that's better. I've just taken on a bunch more of this myself, is debt. If you believe the dollar is going to disintegrate, it is easier to borrow things than buy because you don't need any money to borrow. You just borrow. And there are two ways to increase your net worth. You buy assets that rise, or you borrow liabilities that fall. And if you do the math on it, both of them increase your net worth. Both of them do. It's just it's easier to borrow money than to buy things. And if there's a no-brainer in the world, I love real estate for this reason, because you can short the US dollar better. Because what is a short position? There's four things. You borrow, you exchange for something else, you exchange it back, and you return it. That's a short position. So you borrow cash, you trade it for a house, you get the cash back via rent, you return it to the institution. It's the perfect short on the dollar because it's literally those four steps. Anything wrong with taking on lots and lots of debt right now? I know that sounds crazy, but I've actually taken on, I mentioned I bought some Newmont mining to increase my gold's position, but I'm actually taking on far more debt right now. I'm buying real estate at high interest rates. So tell me where I'm nutty.
Uh, Not necessarily for that reason. I mean, you would have to look at the individual deals to see where the nuttiness may lie. But the
With
overall
me,
strategy,
there will be nuttiness to find. I guarantee
yeah,
it. There'll be
okay.
nuttiness to
Well,
find.
I mean, your cap rate, you have to have a return that's going to exceed
Sure.
your interest costs, obviously. So that's the only thing. So that gets down to the individual deals. But yeah, if you're a debtor, the world's wonderful for you because you're paying back in cheaper currency, and that's what keeps the whole thing going. And that's why the economy needs ever easier money. You mentioned that the real estate guys cruises. I started speaking at their events. They started speaking my events like 10 years ago, and I guess I started about 7 or 8 years ago on their cruises. So yeah, I got the peppers and everything, and at their events.
I mean, they have a pajama party. They
I
let
got
me
the
sit in.
pajamas. When I made my 5 year mark, I got the
Yeah,
pajamas. So
I got some. I'm 6'8", and I had some that had feet made in them. You know how the
oh
onesie.
really?
And they let me sit in on the drums because they're all musicians. I mean, it's a great
Yeah,
party.
it's a blast.
Uh,
I'm going
that's
next.
interesting. Small world for sure.
Yeah, in
Small
a couple
world.
of weeks, I'm going on their latest cruise. But they started to get me to speak to at their events because a lot of the drivers are the same between for
Yeah,
gold for real estate. And I tell people that looking at the future, looking at the fact that we are going to have negative real rates going forward, then you want to own, yes, obviously gold and silver is the monetary metals. You want to own things too, commodities, real estate.
yeah.
You know, if you have the knowledge and you can get into antiques and collectibles, but all that stuff is hobbyist and you have to really know what you're doing.
You
But
do.
yeah, it all
You do.
revolves, it's all being pushed by the same drivers. And there are ways, and probably our mutual friend Russ Gray has developed a strategy where you can take bullion, hold bullion, borrow against that, use that as collateral, then take that and put it into passive income
Get
producing real estate.
get both shorting the dollar and hedging with the gold. It's
Exactly.
pretty
Yeah.
smart stuff. He's a brilliant guy. He's a great student of monetary policy. Go to neworleansconference.com/cashflow. And also check out goldnewsletter.com. Now is a very important time. Your greatest asset, I think, is education. I mentioned before we began, I get on these panels. I'm going to quit doing it where people say, well, if you get in real estate, you're just going to clean toilets, and gold doesn't cash flow, and well, if you get in business, 9 out of 10 fail in the first 5 years, and stocks are paper and they're not real, blah blah blah. People poke holes in an asset class as if an asset class was the key to success. We've mentioned some very brilliant people. My opinion is success is a function of the investor's education, discipline, and temperament. It's a function of the investor more than the asset class. I think we can find, oil guys and natural gas guys. Go
Yeah.
to T. Boone Pickens' family. The late T. Boone Pickens say, yeah, Grandpa was an idiot. Hard case to make. Knock on Warren Buffett's door and say, oh, you hate gold. You must be an idiot. He's done well. You go to a guy like, Kenny McElroy, Than Merrill, Robert Kiyosaki, Kim Kiyosaki. Oh, real estate, you can be cleaning toilet. It isn't so much the asset class as the knowledge. And so when you look at a newsletter and a conference, those are education investments. Those are not gold or silver investments. They're education investments. Learn why silver might have the bigger upside. Learn why that might be. Learn why gold being fungible is, why it's been such a great used for real money. Why is it real money? What's the difference between money and currency? So with that, I'll give you the last word. If someone is not invested in gold opportunistically or invested as a hedge, what would you be your last word for those guys? Are any baby steps where they could start and realize it's not as scary as they think?
Yeah, buy physical metals, buy bullion, don't buy collectibles, don't buy rare coins, don't buy proof modern issue coins or any of that. Just straight bullion coins. Don't pay more than 3 or 4% over for 1 ounce
Over
gold
spot.
over the spot melt value. Don't pay more than 6 or 7% there or thereabouts for silver. Buy it, hold it, have it accessible to you. That doesn't mean a safe deposit box, because one of the things you're insuring against is a bank holiday, and the banks don't want you to put it in there, frankly. Figure out how to store it and safely, get a home safe if necessary, an alarm system, etc. Don't tell anybody, but own it. Protect yourself, and then investigate ways to leverage those that insurance. Look at it as investing, and educate yourself on the sector, because again, we don't know the precise path ahead, but we know the direction generally that we're heading. And you want to own gold and silver and related investments, intangible investments like real estate, going down that path. So don't sit on your hands. The time's a wasting, and as we're seeing, these trends are starting to converge, and we're in the end game of a long cycle.
If you've read a book like Rich Dad, Poor Dad, and your asset column isn't what you want it to be, maybe you're new to assets, maybe you don't have any. I told my sons, I said, buy some ounces of silver. That's a great way to start. It's not expensive. You can buy some silver and say, well, I have an asset now. And, people buy insurance for their home. And I'd ask these people, what do you think the chances really are that your home will burn down the next 5 years? What do you think the chances are? You could look it up statistically and see what that is. And yet you're going to spend thousands of dollars insuring a home against something that will likely never happen. Well, you also have a similar amount of money often in a 401k. Where's your insurance? What's more likely to burn down the next 5 years, your home or your 401k? Having a little silver there, having a little hedge in there, little gold in there. I just don't see why a person wouldn't sleep at night just a little better without having a little precious metal. Brien, you've been so liberal with your time. I get the feeling you and I could probably talk for a few hours. I would love to pick your
available. I got
brain.
another couple of hours, Andy.
we might just sign off with everybody and you and I chat for a little bit.
Yeah.
But again, guys, go to neworleansconference.com. It's /cash flow. Yes.
Yes.
And I would encourage, that, turn it into a business trip. New Orleans is, I assume it's in New Orleans, amazing city.
Yeah.
I mean, the foods and the music, and one of my favorite places to go. My wife and I spent an anniversary there not too long ago. It's a fabulous place to learn in the day, and then maybe a little Mardi Gras party type of stuff at night. A little
It is a
jazz.
lot of fun, great food. We bring all that into the conference, and really brilliant attendees, brilliant speakers. Everybody's mingling in an incredible environment. Andy, you've got to come. Come on down.
It sounds like just like a blast. And then also check out the Gold newsletter. These are investments in self. They're investments in personal development. I'll tell you, whatever you want to invest in, entrepreneurship and investing is a journey of personal development, of discipline, temperament, and knowledge. And investments in self, they pay the best interest of anything else. So hang out just for a bit, Brien. As I close the show, I want to properly thank you once we close. I'll remind everyone to check out these websites, and also go to yourinvestingclass.com, where I have free goodies as well if you want to learn more about investing and the principles of building wealth, particularly from a cash flow standpoint. If you'd like the feeling of having money come to you every month that's not from a job, go to yourinvestingclass.com, learn about cash flow investing. Again, I thank my guest, Brien Lundin. Fabulous conversation. Very much enjoyed it. I learned I got a couple of really good nuggets, no pun intended, from our conversation. I'm Andy Tanner, your host. This is where we make investing simple. We'll see you next time.